Chartmaster lead market technician Rick Ducat is here to help us with the technicals on some big retailers that got earnings early next week. We'll start with Home Depot. Home Depot is slated for Tuesday before the market open for its earnings that we'll get for the quarter. Up and down last year, but it does seem like many names, it's trying to stage a recovery here.
Yes, and much of all the gains basically were erased by the tariff news-related, turbulence that happened several weeks ago here. But now the ship seems to be riding a little bit, but we're coming back to an important area. This red line near 382 marked a series of notable low points here. You can see many times it was tested. Then the breakdown happened. Now we are approaching it once again. So a key resistance point to overcome. Notice as well that price has moved above all three of its moving averages rather quickly here ever since we broke above this green line here, 365. But now the faster 21-day, the exponential moving average is starting to approach crossing above its slower counterparts there. So an easy visual sign of trend improvement here. But the thing that really stood out to me about this chart is if you look a little closer, you can see that it looks like a pretty good example of a head and shoulders type pattern here. You can see we have our shoulder, our head, our corresponding shoulder, and then that supportive area that I mentioned earlier would be the neckline area. It did play out to the downside. It's a bearish pattern here. It took place over quite a long time. Now, if you were also to look at these lows, pretty much the same thing happened in reverse, a bullish head and shoulders inverse type pattern here. So we had the neckline here, shoulder, head, shoulder, and this time it played out to the upside, but we're stuck now at the old neckline. So kind of an interesting mirror image price action here that we saw over the course of several quarters.
Yeah, the beautiful thing this is, if I ever am talking to someone, they want to know about a head and shoulders, this is going to be something I'm going to keep in my back of my mind, because this did play out almost as the textbook would suggest it would, really nicely formed, but also this distance between the neckline and the head is typically a loose target that technicians would use for that downside. That almost looks like it matches up perfectly as well. So a really technically sound pattern there. Rick, my question to you, and I know you got some levels here, is when you see a stock acting very technically textbook and sound, do you trust the stuff a little bit more, or is it always, hey, history is history, future is future?
I guess I would say these patterns, they're not a crystal ball. It could have gone the other way. But what we're looking at here is this was a region where price held the line multiple times. It means there's extra attention on this level. Then when the breakdown does happen, a lot of people, that's where they're giving up. They would set their stop loss orders. So that's why we get these breakout type situations. And it's not like magic. It's not us trying to predict the future. We're just trying to identify the important price levels, either based on price extremes, like we're talking about here, our low points, or heavy volume areas, which we're looking at now with our volume profile study. You can see here, heavy volume node comes in right around 394, happens to match up almost exactly with our linear regression line, our line of best fit based on closing prices. So that's like the fair value idea. So 394 to the upside looks notable. To the downside, we have our point of control, -1 standard deviation channel, old highs, etc. So 365 or so, 362, 36 to 365 or so, that's the supportive area to the downside. And if you were to just quickly look at a long-term chart, you can see, it's kind of an easy way to see the head and shoulders type area here. You can see that's about where we had our old highs, and we couldn't quite hang on to them. But for now, it seems like, we're still trending upward.
It's always great too. It's not always this case, but when you zoom out, oftentimes, that's why, so many just staunch market bulls say, when in doubt, zoom out. And you can see why with this type of a chart. It really softens the volatility. It's definitely not unprecedented, and it's generally moving higher. So really good look at Home Depot. Again, we get the earnings on Home Depot Tuesday morning before the markets open. Let's talk Target now. This is a company that I don't think zooming out is going to do a lot of good. We'll get to that at the end, but staying in the present hasn't done a lot of good for Target either.
Yeah, it's been a difficult, past year, you know, for sure. And the best you could say was, I guess for now that we're holding on to this low that we've established, 87.35, our green line here. But we had our severe gap to the downside back on this earnings event that we saw in November. That gave us this critical low point, our pink line near 120. That was the site, once again, of a severe drop-off. And unfortunately, basically the same thing happened again several weeks later here when we got the tariff news. So now we are struggling to hang on to this very modest short-term upward sloping trend line here. We are hanging on above the yellow 21-day exponential moving average. That's the shortest of the three we follow here, the least significant but the fastest to react here. So a close above that is a potential early warning sign of trend change. So we can also see as well, we're hanging on above that moving average, and also RSI is hanging on to its trend line and crossing above the 50 midline. So momentum is starting to accelerate. And, you know, if our last chart was a good example of head and shoulders, this is a good example of RSI divergence here because we had severe new price lows, but momentum actually held up a little better than you might have thought at first, which is characterized by even the high volatility price movements. Overall, we were kind of just going sideways in terms of our closes here. So now momentum is turning around, the same time price is holding on to support. So that's something worth considering.
Yeah, and wow, what a volume spike around that disappointing earnings event. I mean, it dwarfs everything else. Almost makes it look like there is no other volume spikes. Goes to show just how disappointing that time was. Perhaps investors worried that this could be, some sort of a bear flagging pattern as well. Too early to tell that for sure. But as you said, some of the internal things, the momentum indicators, starting to suggest some positivity brewing. Where are we looking at here? It's a very gappy looking chart.
Yes, we did have those rather severe pushes to the downside, and this gives us the obvious volume nodes to look at. So this is how we were talking about, see where the trading has taken place, but also how much of it was taking place here. So this was a heavy trading activity area here at these lows near 95. A lot of times that would be interpreted as a sign of a significant bottom, but it might have looked that way here too back in the past. So I would say, once again, it's not a crystal ball. This is not a sure thing. It doesn't mean it won't go lower. But for now, these are the areas to watch. 95, 104, which lines up with the area where we had consolidation and then our recent highs. Beyond that, this little area near 115. And to talk about the long-term view, normally we look at 5-year charts, but in Target, it's more appropriate for a 10-year chart because if you look back at our green line here, the recent lows, high point, low point, low point once again. So and in this case as well, the heavy volume is below where price is right now, but it's so far in the past, I'm not sure if I would trust that too much either.
You also want to know what this date is. This is the COVID lows.
Yeah.
So you had this massive run up with e-commerce build outs and all the things that Target did well in that sort of reflationary time of 2021 into 2022. But once it ran out of momentum, retraced all the way back, 5 years of gains wiped out. So really, disappointing for investors for a company that seemingly just had so much going for it on the ascent. Wednesday morning, we get Target. Also on Wednesday morning, we get our last name, which is TJX. So I was talking with Jan Rogers Niffen yesterday, and TJX was on his list of biggest and best retailers, which surprised me because it doesn't come to mind the same way a Walmart or even a Home Depot might. TJX, though, quietly just a monster performer.
Yes, very strong performance at the highs now and hanging on above the previous highs, 127.20, our light green line here. This was the old ceiling, and it was a situation where we have a chart now that looks quite different from much of the rest of the market here. We didn't really have the big tariff plunge, and we didn't even make new lows during that situation here. We've just kind of kept grinding upward, taking out our highs. Once again here at 131. RSI has moderated somewhat here. We had a very sharp rally here, but when the tariff news started, it was still making higher lows, but it was much more of a gentle slope to the upside. Now, though, we are approaching that overbought area once again, that threshold of 70 on the RSI, as price continues to climb. And, you know, to talk more about RSI, to piggyback on our last chart here, overbought, you might think, oh, it's overbought, it means it's due for a pullback. Not necessarily. It's more of a nuanced indicator. If we're trending and it's overbought, like a strong trend, that would be a bullish sign. If we're range bound and it's starting to get overbought and you're in the resistance area, that would be more of the warning sign, so to speak. But, you know, as I said, though, it's we're still making new highs here in terms of momentum. Yeah,
you know, when this is where I think technical sometimes it's one variable and it's one thing, and you've talked about it's not necessarily going to be, you know, batting 100 or 1,000 or anything like that. It's just pieces of information. It's trying to sort through the noise. I would have thought something like TJX was like the exact type of company that tariffs were going to impact, but it's weathered the storm better than basically anything I've seen. Talk to me about some of these volume levels. This is just such a different volume profile. It's just so bulky, and it's all below where we're at.
Almost like a normal distribution curve, you know, with everything kind of in the middle. Perhaps just a coincidence that it happens to line up that way. But the point of control, the middle here, right around 118, lines up pretty close to the purple 250 2-day long-term EMA. So this could be a long-term important supportive area to keep an eye on here. But I mean, price is so strong here, and this area is more important in the near term. It's the site of the orange 63-day EMA. It's where price kind of kept topping out near about 125. And you'll notice the extreme prices and the heavy volume areas don't really line up, just kind of, you know, common sense, like the extreme prices are where we spend the least amount of time. But for now, you can see it's kind of a clear general area to be on the lookout for to the downside. To the upside, 135.37 is our +1 standard deviation channel. People use it to project potential resistance here. This could be a consolidation area to watch out for. Once again, though, doesn't mean it won't just blaze through it if we get good earnings and leave it in the dust.
Yeah, that's a good call out. With the earnings, I mean, all things are thrown out because it can change the picture so quickly. We saw that with that target spike on the volume and huge drop down. You got a longer term look here as well?
We do, and we're back to a 5-year weekly chart for this name here. But, you know, long term, very consistent uptrend here. I mean, look at
more the same.
Yeah, exactly. I mean, we're hanging on really well to this trend line so far. Volume nodes more significant to the downside, kind of just a big lump of trading activity here. Not really too much else to say in terms of that from our volume profile perspective, but our weekly +1 standard deviation, not really too much higher, 138.30. So 135 to 138, that might be one area many people will be watching.
Always difficult to project new all-time highs, but a couple studies that look to do that in the event that earnings are positive and lead to a stock reaction higher. Lead market technician Rick Ducat, the chart master. Always great to get the technical take.